I don't see any questions. You can unmute yourself if you have any questions. We would like this presentation to be interactive. So
Exactly.
if you have any questions, then feel free to raise your question, and Clive is happy to answer.
Yeah, so I'll flag our put here our tax bracket. So feel free to take a screenshot of our tax current tax bracket. So again, another tip on the tax bracket as well is this is where RSP planning goes into. For example, my income is 52,000. Okay, so the extra 2,000 is taxed at 29%. So if I want to save that 29%, I would just have to buy 2,000 RSP, and that will bring me back to the lower bracket. So that's how RSP should be done, right? That's why I always tell my client, put TFSA, and then at the end of the year, check how much you earn, and then you compare your tax bracket if it's worth buying it or not, right? Just don't buy monthly or like that. It doesn't make sense. Put it to your TFSA and then park it to your TFSA and transfer to RSP when it's needed. Okay. And then another thing with RSP is what do I call that? The RSP loan. Okay, RSP loan is also very beneficial if you have few. For example, I have down payment, but it's not enough. Then it's worth to do RSP loan to add from my down payment so that the bank will take my down payment as a mortgage. So that makes sense. Then I will just pay my loan gradually later on. But you don't take a loan now hoping you're going to buy a house 5 years from now. Not unless you're building your credit, right? If you want to build your credit, RSP loan can also help you build your credit because you're paying monthly. So there are pros and cons with RSP, and you should weigh things properly. And if you think your financial advisor or insurance advisor cannot address those needs, then talk to your accountant. And that's actually my advantage as an advisor as well, because I do both. I do tax and I do insurance and investment. So I have better eye view on what's not and what's good for the clients. Okay. And if you have RSP, for example, I already have RSP, what shall I do? Shall I withdraw all? No, never do that. So you should have an exit strategy of your RSP. For example, if you are now 40 years old or 50 years old, for example, I'm 55 and I have 50,000 in my RSP. Then on the next 10 years, I would have to withdraw 5,000 per year. So even if I get it, I'm gonna be taxed on that 5,000 withdrawal, and the net I will put it on my TFSA. It's okay because I'm gonna be taxed anyways later on. At least if I withdraw now, if I get taxed, I'm gonna be okay. I'm still have income. But if I held on to that money later on, and I'm gonna be taxed on it, it will cost me half of that will cost my pension. So that's why.
Okay. I have a question.
Yes.
Okay. My son is 23 years old. He still live with me, and the last couple of years that he started to file tax, I think when he was 20 or 21, he earned a lot of money from the military. So one of my tax advisor at that time advised me that he should pay rent on me, which it's true. He needs to pay rent on me. I cannot just let him go like that. So, but then later on, we were reassessed because they said that we are not allowed because it's my son. Is it true? Because it says like, oh, it's just it's like your son was just helping on you, but he has his income. He pay me. It doesn't matter how I spend that money, but when I start, somebody told me, oh, you can claim that. Then I okay, can we start it? And then I told them, okay, this is how much I asked them. Like it was, at that time, it was only like 5,000 in whole year. And so but then later on that year, the second year, they reassessed me and my husband because they said that I should not claim that 5,000 as an income from a rent.
Well, yes.
So there was a readjustment because he is my son.
Well, it depends, right? Probably when you did your tax, yes, you did declare that as an income. But okay, going back here, this is how for you to understand what the scenario there. Okay, so is actually in your rent income. I think that's what most accountants were doing in the past. They took advantage of that. Okay, so instead of that rent, for example, you got rent income from your child 5,000, but your accountant charged too much expenses on it. It becomes a negative income. That's why CRA says, well, you're taking advantage on us. So now it's a conflict of interest. He's not really a renter, right? But if you had income there and not a negative income, CRA will not question that, because any additional income means tax, right? But we can have our children as our renter, as a tenant, providing you have lease agreement and you really paid tax, meaning you really declared actual rent income, rent net income, not rent loss. Right? Probably what happened, that's why you got questioned, because you had a rent loss instead of rent income.
Oh, I see. Yeah, it could be, but because I don't know, I didn't know at that time. It's just that because when he starts filing his stocks, I bring him to this lady that I know, so that it's in one shot. But then I wonder though, because my son never get reassessed, so it's still on the same, like, okay, this is his rent and it was deducted on his income because of the rent, but it's us who get reassessed.
Yeah,
and
probably
probably
your prior accountant.
$200 on that. Oh, I see.
Yeah, your prior accountant declared too much loss. Probably you had a 5,000 rent loss, rent income instead of rent income became a rent loss. So if it becomes a negative income, it will be deducted from your employment income to increase your refund, right? So that's, I know many accountants have tried to overuse that type of approach.
Kind of after we get reassessed, I was like, oh, I was disappointed, because it's like at first it was that lady who suggests, oh, you can do that, because I didn't know, but because I just asked him. I just asked her, I said, my son, okay, the income was 30-something thousand. And then I said, how about he pays rent to me now, I said. And then, can you deduct it? And they said, oh, yeah. So we can deduct it in his income, and then it becomes income to rental income on my side as a parent. But then that's it. We get reassessed, and him never, it go through. I don't know that they said, okay, this is not good, but then on his side, I didn't complain that he wasn't get reassessed, because otherwise I think he's gonna pay back some of the refund if he was reassessed, because there was already that thing. But for this year, am I allowed to claim it? And then I will just tell, I might approach somebody that it should, if I declare the rent as an income, it will add it to my income. And then, do you think it's worth it? Because it will bring up more of my
it will give you more income. So sometimes having net rental income, good if that actual tenant. Okay, if the actual tenant lives there, he wants his receipt, because he will use that on his tax You have to, as a tenant, right? As a landlord.
Yeah.
But if it's your family member and that income, the rent expense that we'd use, that's not for our income taxes, for Ontario Trillium benefit, which will give probably us additional $220 on that. That's not much. It's not gonna give him $1,000 from the refund from the Trillium. The maximum probably he gets is $400.
He got. I think he got only the Trillium for like $67.
Yes, per month, right? So in a year, it's only like 400. But that income is gonna cost you more tax, because it will raise you to the next bracket.
Okay. So now
doesn't make sense. And then you pay more tax rate. We pay more fee to, if I'm your accountant, I'm gonna charge you more, because now you have additional income I have to consider. Because with rental income, I have to deduct how much your mortgage interest, utilities. So now I have more data to process. It's gonna cost you more. So
sometimes we have another question.
Yes.
We have a question here from Shane Clary. Who qualifies for first-time home buyers credit, and how much can you get back?
Okay, so going back there, home buyer credit, as long Anybody, actually, right? The term home buyer, though, is basically related only to RSP.
Yeah,
Okay?
yeah.
Right? If you have RSP contribution, okay, let's go back to that page.
And you use that contribution to buy your first home, then
Yes.
you
So
can get
you
tax.
need to have RSP first. So
Mhm.
another misconception of people, so government will give me 35,000. No, you need to put 35,000 into your RRSP and then you withdraw that. So in order for you to qualify for home buyer, again, you should not own a house in the last 5 years. This is
Mhm.
not first time home buyer, it's only home buyer plan. So it
Mhm.
doesn't have to be your first time, as long as you don't own a house in the past 5 years. Okay. As long as the bank allows you to get a mortgage, even if it's just 1 year in Canada, then you can qualify for home buyer. But again, the problem with RSP is you cannot just put any money there. You need to have an actual room to qualify for RSP deduction. Okay,
Yes.
you put money in RSP. You did in a home buyer. In order for you to qualify that as a tax shield withdrawal, it has to be in your RSP account for 3 months or 90 days. So you
Yes.
cannot, for example, I'm gonna buy a house next week. Or Clive told me I put 35,000. No, I cannot use that because the moment you take it out, that's considered income right
Yeah.
away because it
Mhm.
did
I also have
mature yet for 3 months.
I also have a question.
Yes, Shirley.
When is the best age to start claiming for the CPP? Because we receive a letter from the government. The monthly pension varies. If you start taking it at 60, example, you're only gonna get 500 per month. But if you
Yes.
start taking it when you're 65, around 700 per month. If you wait till 70 years old, you're gonna get 1,000 monthly.
Yes.
So what is the best age then? Should
Okay.
be 60, 65, or 70?
It depends, right? Okay, let me show you another slide
So
here.
confusing, eh? They're
Yes.
tempting
Okay.
you not to take it because they're
So-
showing if you waited till 70 years old, you'll be getting 1,000 monthly.
Okay, here's the thing. For
If
CPP,
you live long, yeah, but if
yeah,
not,
you're allowed to take it early. Okay.
yeah,
So
you're
the
allowed at
early
60.
the early you can
Yeah.
take it is at age 60.
Yes,
But
yes.
they will deduct 0.6% per month or 7.2% per year from your actual CPP if you take it out, if you started it in 65.
Mhm.
So is it worth it for you to receive it early and then reduce up to 40% from your actual pension later on? So here's the case. So we have to check based on your lineage. If your parents, grandparents, siblings, they died on their 70s, better take it early because you probably die early too. But if your grandparents, your parents live up to 80s, it's not worth. Why? Because if I'm 60 and I'm still working full time and my tax bracket is at 30%, so whatever CPP that I got 30% right away from that, I will return to the government because I'm taxed at 30%. Then when I retire, my actual pension is now almost 50% lesser. And then when I retire, that's when I actually needed the money. And that pension will be with me until I die. When I'm working now, even if I don't get extra $300, $400 per month from my CPP, it's okay. That's not part of my budget anyways. I can live without that. But when I retire, can you live without $500 per month? Right? Instead of me getting $800 from my CPP, I would now be getting
Kasi
400 or
if you're still working,
Income, yeah, income.
dadagdag pa sa income mo.
yes.
Pero
That's
yung
an
buwan,
Ang tanong mo?
sasabihin na 10% kukunin muna para kaunti lang ang makukuha.
no, not enough because again, going to tax bracket, our lowest tax bracket is 20%. So even if you're gonna tell CPP take 10% from it, and then your tax bracket is at 30%, you still owe 20% more at the end of the year.
Mm-hmm.
Yes.
Ano, mas
So sometimes not really worth. I have a client, he retired when he's 69 years old. So at the same time with CPP, if you delay it, meaning you're still working and I don't want my CPP pension to be taxed, I'm gonna delay it, you're gonna earn 8.4% per year. So actually you're gonna get more than the penalty. So I have a client, she retired on her 69, she's getting more than $2,000 on her entire pension, CPP, old age and supplement. Well, I have other client who took it early, and now she retires only like 1,300. So how can you live with 1,300?
Yeah.
But if you have a spouse, I always tell my client, if you're single and then you're about to retire, have a partner, have a husband or wife, because with yours, for example, a government pension now is 1,800, 1,900. So, okay, you have 1,900 and your husband has 1,900. So that's okay. You have $4,000 to live by. That's okay. You can survive. But the problem about our government pension, when we die, you don't get the 1,900 from your deceased partner. You will only get half of the CPP and probably not even 35% of your old age. So out from the 1,900, you could probably get like $700. So that's why retirement planning, if you plan for your retirement, it should be your income alone. You should not take into consideration that you have a husband, because the husband may not live longer. That's why I always tell my client, buy a permanent life insurance. Because if your husband dies, at least he has 200,000 life insurance, that will be your pension. But if your insurance is term and it has expired upon retirement, then he dies and the beneficiary for RRSP is not you and the kids, the RRSP is going to be taxed. How much money are you going to get in return? Nothing.
Yeah.
So it's a case-to-case basis.
Meaning like it's worth it to wait. If you're still working, then don't start taking the CPP, right?
So yeah, especially if the
when you really
taxpayers are
retire, when you really retire, that's the time then you start taking it.
Yes.
So at least you could wait for your CPP to increase more if you take it out later.
Exactly. Yeah.
So what is the best age? So meaning before you retire also, it's advisable to leave nothing on RSP so that you're going to get the full benefit from the government, right?
It depends. If you have a private pension, it's basically the same concept. That's an income. So it's not worth depleting RSP and be taxed on the withdrawal while you're still working. Just wait until you retire. After all, you have a taxable pension anyways from your company pension. You may not get a supplement. The only reason why you take it out early because you don't want your supplement to be lesser. But you still have two other pensions. You still have a CPP and old age. But if you don't get supplement because you already have a company pension, then don't deplete your RSP. Withdraw them later on, but just make sure that your beneficiary is your spouse, not your children. But the problem with RSP though is like this. So I have a client, I have another client, her husband died 3 years ago, 3 years before she died. And then the RSP of her husband and the company pension of her husband went to her. And then she retired in 2019 because she got a lot of money. And then her parents' money as well. She died as well. So she retired hoping that she could enjoy the money. Then COVID happens. And then she died in 2021. She never really enjoyed the money.
Where's the money?
Well, it's tax before it went to the child. And the child, the daughter is my client. She was complaining, oh my gosh, a tax of this is 60,000. Well, that's it. There's nothing really we can do for that. Like it should be taxed on your mom's before it be given to you. That's why.
Now, there's another question.
Yes.
Sorry, there's another question here about RSP. If RSP is not a loan, it's savings, and you use it for first-time home buyers, do you still have to pay it back?
Okay, so I think, so going back here, the paying back is again RSP is like a basket. Wholesale kit. If you take it from there, that will be an income. Right? If you put back there, that will be deduction to your tax.
At least.
Yeah.
Sorry, I had to.
So basically with RSP, if you take it out, that will be an income, right? So the reason why they're telling you to pay back because that will be amortized in the next 15 years. So for example, if you take out 30,000, you'll be taxed with 2,000 income, not 2,000 tax, 2,000 income for the next 15 years. So I always tell my client, don't put it back. You already had a way out. Why do you need to put it back? Just take the tax load on that 2,000 per year. After all, it's not that much. After all, if you put it back 2,000 per year or 2,300, and you have 15,000 when you retire, the moment you take it out, if you withdraw 2,000 per year, it will reduce 1,200 from 1,150 from your pension. So it's not worth. So I better be taxed now or be taxed later. But if you're gonna be taxed later, and your tax profile is you're gonna be depending on your full government pension, it will cost you additional half of that withdrawal will cost you on your pension. So don't put it back. But if your income is really 100,000 or more, yeah, put it back, because most likely you don't get any supplement anyways. All right. So again, going back here to our government pension page. Where's that thing? There. All right. So that's normally our government pension. What I want around. So the maximum CPP is 1.2, and the maximum old age is 600. So the maximum government pension we gonna get is only $2,100. No more than that. Before COVID, the maximum of CPP was 1,080, and the maximum of old age is 635. So they actually increased it a little bit. So if your CPP is lower, because you came here only on your 50s and you never worked that much, and your old age is also lower because you never stayed in Canada for too long, you might get a bigger supplement. So you should protect that supplement. You should invest in a way that your income, whatever cash flow you will get from whatever savings and investment you got, will never be taxed. So RSP is not the option for those people.
Okay, what about tax implications on income on capital gains?
Yes, so that's why for capital gains on real property,
Yes.
yeah, that's taxable, unfortunately. Okay, capital gain is whatever the growth of your asset. For example, I buy a house at 1 million, and then I retire at 2 million. So I have a gain of 1 million. Half of that is taxable. 500,000 will be added to my income if I sell my house. The exemption for real estate is your primary home. So
Yes.
even if your primary home goes up to
That's
$10 million, you're not going to be
Yes.
taxed on it.
So if you're a first-time home buyers, if you're a first-time home buyer and you want to buy another property, let's say you have own a property now as your primary residence and you plan to buy another property as a rental property, then you can actually reverse. You can, the first one, you declare this as your rental property, and the second property, to avoid capital gains, make it as your primary residence. Get what I'm saying? Because some investors, they would say, okay, I have a primary residence and I want to use my equity to buy another property. And then they want to declare the second property as a rental property, right? So they can get rental income. But then if they're going to sell that rental property, then that's the time that they're going to pay the capital gain tax. But if they use their primary residence as now the rental property and the next property will be their primary residence, then, you know, that if they're going to sell that one later or maybe hold it for a few years' time, then you can avoid that capital gain tax.
Yeah, they call it transitioning your
Yeah.
capital gain, taxable capital gains, right? So
Yes.
what she means is, instead of you selling your rental property, which
Mhm.
can create capital gains on you, sell your primary home.
Yes.
Either you sell your own primary home, or your name, if you intend to sell your rental property, then make your rental property as your primary home, and then
Yeah.
keep it for not just 1 year. I think CRA will see that. Right?
You
Keep it
have
for
to
2 or 3
keep
years,
it in
for
mind.
3 years, at least 3 years, and then after 3 years you sell that, and then your primary home will now be your primary home.
Mhm.
Yeah, there's a way to do that, but if you have so many houses now, like 3 or 4 houses, it's impossible for you to do that.
Yes. Oh, what about the moving expenses? Can they declare?
Oh yes,
their
yeah, I did not
moving
mention it because
expenses?
it's not common. Moving expenses is any expense you move from one area to the other. Okay, so it has to be 40 kilometers away from where you live, from your own home. So it's not a bit. Let's see, 400. What is it? Yeah, 40 kilometers. No. Okay, so it doesn't have to be province to province. Okay, as long as stop sharing this.
It's 40 kilometers.
Yeah, so as long as, for example, you move to another, I know 400 or 400 kilometers. So it has to be a little bit far, right? For example, I live in Toronto and I'm gonna move to Windsor, like that. So any expense you move, like a moving, or if you any hotel accommodation, the meal, the gas, keep those.
This is
And
for self-employed.
no,
Right.
it's for everyone, including for
For
employment.
everyone.
It's considered a taxable deduction, meaning it will be a direct deduction to your income. For example, I live in Toronto and I have a good working opportunity in Windsor, and I earn 30,000 on that particular job, but when moving all my stuff, I spent $2,000. So that $2,000 will be deducted from my income earned in Windsor.
Yes. There's also a question about the babysitter. If you're paying a babysitter, can you claim that too?
Yes, yeah. So again, babysitter is direct deduction to your income. There's only a maximum of 8,000 per child if it's below 6 years old, and 5,000 is if it's above 8 years old. Okay, so let me just show you that screen again. You can take a screenshot on it.
So that's in the category of child expense, right? Child care expenses.
Child care expenses. Yes. Okay, where is that? There. Okay. Next one.
A question about the child care. Even if it's a cash job that the babysitter will come to my house, I can claim that.
I know, no. So with child care expense,
It has to
it
be in the
has to be a
child
daycare
taxing
center
agency.
or a person that gives you his SIN. Go. So if
Okay.
it's a private individual, that person should give you the SIN because that person should declare as an income on his side or her side. So who
What-
can be a babysitter? Anybody, as long as they're legally able to work in Canada. Even siblings can be babysitter as long as the sibling is 18 years old. So if you have a teenager and you have a young
Oh.
child, just like me, I have a 19-year-old. When our eldest turned 18, he's now our babysitter. So I put
But he has to declare that income too, Clive,
yes,
right?
but that should.
I cannot
Also
get
remember,
away
our
with
first
it.
14,000 don't have tax. So if you put, for example, you have 4 kids, 3 young ones, and one 18-year-old, 19-year-old. So you can put 15 or even 15,000 or even 20,000 income to your child, to your eldest. He might pay like 800 tax on it, but the refund you get will be like $4,000 or $5,000, $6,000. That's why I don't pay tax.
That's within your family. What if you're paying cash to a babysitter and they won't declare it as their
No, you
income?
can't, because when you get audited, if it's not your employee, like you don't issue T4 to the babysitter, they need a letter of acknowledgement from that babysitter that he acknowledged that he paid this much, and that's I think I have a sample from that. Let me see. I have a sample letter because I always send whenever I have
The
clients with
babysitter
questions
too, the
about
one I
babies.
acknowledge because he's scared. She's scared with the tax too. So, oh my God.
Yes.
Oh,
Yeah.
yeah.
So this is normally what I sent to my client, this letter, okay, that to whom okay, that I am a part-time babysitter of name the child, okay, for the particular year, and I received 5,000 from the parent, okay, and then on top of that, and then the name of the child should be mentioned, okay. We can also add the age of the child, and then he will sign this with his name and SIN. And this is the same proof that you send to CRA, and CRA will check if this SIN also declared that income. So that's the only way you can. So the best babysitters are the teenagers below 18 years old. But the problem, you cannot make your child 18-year-old below 18-year-old, a minor child, as a babysitter to your children, right? But if it's 18 years old and above, you can make them as your babysitter.
So
Okay.
how should they declare the babysitting income that they got? Is it
Other income.
as self-employed?
No, as other income. So
Other
it's
income. Yes.
other
Oh,
income
other
is
income.
yes. So it's in here, like that's a space. So it's in here, like other employment income, line 1040. So right?
Okay. Thank you.
That one, not self-employed.
Mhm. Are there any more questions?
Hi,
Wow.
Clive.
Hello, Eileen.
Hi, could you please explain it to us again about the RRSP? You mentioned that it's not good strategy if you put, let's say you want to save RRSP every month. It's not a good strategy. It's better to put it in the FSA and then
Okay.
Can you just explain it to me again, please? Thank you.
Okay. So again, RSP, if you put, for example, I earn like only 40,000 income. So I am on a 20% tax bracket, and I'm putting $200 per month. So with $200 per month, that's right? 200 times 12 months, it's only 2,400. And I'm on a 20% tax bracket. I only earn a refund of 480. Okay. And then that 480, by the moment I receive it, the following week we went to movies. I just spend it. It's gone, right? It's a useless strategy because CRA is just teaching you to be a extravagant spender. They just give you extra $400 to spend, and then later on when you withdraw it as a down payment, you're gonna be taxed on the withdrawal, even if you're gonna be taxed based on 2,000 income, but your tax bracket that time could be more than 20%, so it doesn't make sense. But if you put it your TFSA, okay, for example, I'm putting $20 per month, which is 2,400 in a year. And then after 5 years, I was able to come up with 30,000 along with my other savings. And then that entire 30,000, I put to my RSP. I buy RSP worth 30,000. But that time my income was 70,000 because I worked 2 jobs in order for me to be qualified with a good mortgage. So now my tax bracket is at 30%. So imagine if your tax bracket is, for example, you have entire 35,000 in RSP and you're on a 30% tax bracket. So you get a refund of 10,500 by February or March. So that 10,500, if you haven't buy a house yet, I can use that as additional down payment or a lawyer's fee. Or if I already bought a house, then I file after my tax the following year, the 10,500, I can use that to renovate a kitchen, to pay any debts that I have while owning a house. Because when you buy a house, it's expected for homeowner to spend here and there, swipe their credit cards and blah, blah, blah. So I have 10,500 interest free that I can use to pay for those. And then CRA anyways, gonna be taxed gradually 2 years after I buy the house. So CRA is giving me 2 years to prepare for the tax, while this 10,500, he's lending it to me interest free. But if you don't want to use that, then buy stocks, right? Buy Tesla stocks. Stocks of Tesla now is $150. Imagine if that $150 per share in the next 5 years became $500, so that 10,000 becomes 60,000, and you put it to your TFSA so that you won't be taxed. So that's a better strategy for RSP. That's why some of my clients were putting $50, $25, just a waste of money, right? Put it to TFSA, no RSP. Yes, refund is good as long as you, again, if you put money to RSP, it doesn't matter what tax bracket you have. 20% tax saving is still a tax saving. Like, who are we to belittle on that? But make sure that whatever refund from your RSP, you don't spend it. You put it aside. So other strategy for RSP, if you're gonna put it as a down payment, what if I am on a 30% tax bracket and every dollar I contribute, 30% goes as a refund. So for example, I faithfully put 3,000 per year on my RSP because I'm actually very serious in putting a down payment. So that 900 refund that I have, I put it back to my RSP so that by next year my contribution will be 3,900, and now my refund will no longer be 900. It will be more because now my contribution is 3,900. So you call it rolling. You can also do that. Okay. Again, RSP, if you put money there, just make sure the refund you don't spend it. Okay.
Clive, I have another question.
Yes.
It's okay. Let's say we are self-employed, and aside from being self-employed, we also have other extra income like other work.
Mhm.
Now, do we need to contact CRA so you just to file tax like for the other income?
No, because when you file your tax, your self-employment income is part of your income. Like, for example, this is the software, right? This is the software that I use. So on the income page, okay, employment income will be there and the business income will be here. So that's part of the calculation. CRA will see that. You have a business gross. For example, I earned in my insurance business, I earn 100,000 and I have 40,000 expenses. So my net will be 60. So my income will be 25,000 plus 60,000. So my total income will be 85,000. So it's part of your income. Wow, we reach actually
How about
2 hours.
how about let's say you're doing like a cash job and you want to declare it,
You
like, you know.
can actually do that, right? So just make sure that if you declare income, as additional income, not the purpose of you claiming a loss. Okay, a lot of people are doing it. Okay, for example, I was cleaning this office. I earned 5,000, but I claimed 10,000 worth of expenses, so that becomes -5. So now my income become 25,000, and then my business income becomes -5. Then my total income becomes 20. If you do that, CRA will verify if your loss is a legitimate loss. So first, they're gonna find out is it a legitimate business, or you're just making it as a front for you to claim expenses, right? So how do you justify a legitimate business? First, it has to be registered. Okay, that's the first thing. You register your business. You have a business account either with CRA or you have a business name, or just like insurance advisor, our license are considered already registration. So meaning that's for CRA's sake, or they consider it as a self-employed activity because I'm an insurance advisor. But if you're just, for example, the most common mistake for people, like the rainbow vacuum or the salad master, but they don't earn, right? They just keep presenting and they claim all those groceries, and then they never really earn. Nobody bought that cookware. Then CRA may question, is that a legitimate business or just fond of cooking for other people's kitchen, right? So in order for you to claim that, first you have to register your business, that I am a reseller of this particular product. So you have a business name, for example, Clive's Kitchens A, right? And I sell specific product for that particular kitchenware. So that makes my business legitimate. And if your business is legitimate, you're allowed to claim losses, and just like any other business, right? Barely a business makes money in the first 2 years or first 3 years. So we can actually claim losses. But again, if you intend to do that as a tax saving strategy, make sure that the business alone is legitimate. Okay? For example, other clients I have, like selling Amway's products, but they don't keep inventories. Like, how can you sell something and you don't have inventory? Right? They claim gas and meals and cell phone, internet, but they don't have inventory. So you need to have inventory. Or at least you make money. If you don't make money, then it's not a business. It's basically just a hobby.
How about those who are renting and then, renting out to others, and then they declare the rental income?
So
So at the end, so at the end, like the rent is higher than the income that they receive. So let's say the rent is like 3,000, and then the sublease is just like what, 2,000. So
Okay.
the loss is normal, right?
No, not really. Because
Oh,
first, they don't own the property, right? So sublease can only lower your rent expense. But it's very questionable, not unless if it's a business entity, right? But for primary home, no, CRA will try to discourage that, taking advantage of losses, rental loss, because first you live there, like you never rented that because for the purpose of you renting it to someone else. So sublease, basically, I have a 2-bedroom and I sublease my other room to subsidize my rental expense. But for example, the rent is 2,000 and I rented it out the other bedroom for 1,000. Will that 1,000 per month my income? Not really. Okay, it will not be your income. But will that other person who paid 1,000 to me can claim it as a rental expense for Ontario Trillium benefit sake? No, because in order for you to claim for rent for Ontario Trillium benefit, you need to have rental agreement plus proof of payment. I may have proof of payment that I paid this, for example, that person paid me through my Interact, but I cannot issue a lease agreement with him because I don't own the property.
Mhm. Yes. Okay. I think it's 8:57 now.
Actually, very interactive. I like it. right?
Yes, yes, I really like
Oh,
it.
I have another question again.
Okay.
Okay,
more.
hey, Clive, you mentioned that it's better to pay in advance. It's better to pay a year in advance. And then you mentioned the pay list. Like you do installment. How do you do it?
Yeah, so in your online banking, so just add a payee. Okay.
It's in
just
Siri. Yeah, you
yeah,
can
just
add.
like any other pay. Like for example, you pay your bills, so internet bills. Instead of putting FIDO, you type CRA, and then on the CRA there will be a lot of options. Select CRA installment. Okay, CRA installment is for this year's tax year, but that will be applied when you file your tax next year. But then the account number will be your 9-digit SIN. So if you put $100 there every 2 weeks, that will be credited by next year. It will be showing here. Like when I file your tax, it will show up here. It will show up here. Tax paid by installment. For example, I put $2,000 there, and I have a $100 refund without that. So my refund becomes $2,100. For example, if I'm supposed to pay $3,000, but I already paid $2,000 in advance. Now I only have to pay $1,000. Okay, but the goal there though is it should increase your refund, at least because the deadline will not be applicable to you. Again, for failing to file tax on time, it's 5% penalty and 5% interest. Okay, the 5% interest is will be compounded monthly, right? For example, I did not file my tax, and then if I filed my tax right away on time, I had an owing of $2,000. So right away, CRA will charge me additional $100. So my owing will be $2,100, and that $2,100 will earn a monthly interest of 0.42%. Right? So it's better not to pay interest. Okay, I always tell my client, if you put the $2,000 in the bank, did it earn 2%? Did it earn 10%? No, it never earned 5% or never earned 10%. So you're losing money. So you better put your money here right away. At least, although it doesn't earn interest, but it doesn't make you pay more tax in the end. So at least you don't need to chase all your T4s before April 30, because basically you don't have a deadline. I don't have a deadline because I always pay my tax in advance.
Is it advisable for self-employed and
Yes.
employed?
Yes.
Self-employed only.
Yeah, self-employed, if you're earning commission, at least 20% or 15% of your commission, pay in advance. So that you don't have to worry about that commission. Okay, or if your commission becomes more than 50,000, then at least 20 or 25% of your commission you pay in advance. Same thing with EI. Okay, people who are claiming EI will normally pay some more tax in the end because EI don't tax you with 20%. They tax only 2%. So when you file for EI, once you start receiving your benefits, you call Service Canada right away and tell them, please deduct 15% from my regular benefit. Because your lowest tax bracket is 20%, but with your basic credit of 14,000, you may not be taxed the entire EI, but for sure the tax will not be lower than 2%. The idea with EI, they don't tax you much because they don't know if you have income before you're gonna have income after. So consider EI like additional source of income. It will be taxed in your tax bracket. But if you're earning EI all throughout the year and you're, for example, maternity benefits, and your total benefits become 20,000, only 14,000 is considered basic credit. Beyond 14,000, that's taxable at 20%. So And then what if you work before, that you work for 4 months and you had an EI in the next 8 months, and then your first 4 months of the year you already earn like 10,000. So now your tax bracket will be so high. Oh no, you're supposed to pay 20% on the EI, but if they don't deduct 20% from your tax, then you're gonna pay tax at the end of the year. So but that's why I pay in advance. Even if you deducted more from your EI, all your tax anyways will be here, right? Income tax deducted. If that's more compared to your income tax portion here, then that's gonna be your refund. Okay.
Okay.
Thank you guys.
Okay, I think we
Thank you. Very informative.
Yes.
Very, very.
yes, yeah, thank you. Clive, can you make me a host? Sorry.
How do I do that?
Thanks a lot, guys. It's very educational for us.
Yeah, so thank you so much. Once again, thank you everyone for participating and giving us your time to learn and understand about tax planning. For me as a self-employed, and because we always want to increase our income, right? Careful planning is really advantageous, especially for a higher income individual, right? So with that said, thank you so much, Clive, for giving us this opportunity to learn something, so valuable information. And for everyone, thank you very much. Clive, if you want to know more information about your tax filing, or you have any an accountant that you can also ask, then ask for what benefit can the tax planning can do for you. Also, I would like to announce that I have, let me share my screen. I also would like to invite you. I have another, I don't know if you can see my screen. Can you see my screen?
No, actually.
No? Clive, can you make me a host?
I already did.
Oh, you did? Wait
Yeah,
a
I think
second.
I'm not sure. I don't know why it didn't work.
Host disable participant to screen sharing. Anyway, I have your email address. I would like to invite everyone. I'm hosting another webinar. This will be on Saturday. This is for first-time home buyers.
Wow.
New to Canada first-time home buyers webinar with a mortgage agent partner. For everyone who wants to, even if you're not new to Canada but you're not a homeowner yet, and you want to learn the home buying process, the qualification process, what are government programs or what are government incentives that you can avail as a first-time home buyer, then come check out our webinar on Saturday, which is 2:30 to 3:30. If it's okay with you, I can send you the link, the registration link. It's also on Eventbrite, and I will also share this information to everyone who attended tonight, if that's okay with you.
Sure.
Thank you.
Yeah.
And you can also share the registration link to all your friends who are interested to know about the home buying process. Once again, thank you very much from the bottom of my heart to giving us your time to learn. I've learned a lot too. And I hope that there will be more webinars like this, an information session. If you want to learn any topics, just let me know. I have few contacts like asset protection, about investments. I can also invite
Maybe credit
other-
score.
Yes,
Credit score, we need that. Yeah.
Yeah, credit score actually is a part of the webinar, like how to
Okay.
rebuild your credit score, how to protect your credit score, because credit worthiness is one of the factor the lender would look at, especially if you're a first-time home buyer. If they see that your credit rating is not good, then automatically they will not care about your application. So yeah, that's one thing that we are going to discuss on the webinar on Saturday, which is 2:30 to 3:30. So again, thank you so much. Have a good night,
Thank you,
everyone.
guys.
And like Clive said, this is a recorded session. So if you still would like to review all this presentation, then you can ask the link I haven't give you my, I think my email address. You can contact me at delmarchinky@gmail.com, or you can also follow me on Facebook, Chinky Delmar, and we can be friends wherever. So thank you so much.
Thank
And
you.
I
Good
hope you
night,
learned
guys.
a lot from tonight's presentation. Again, have a good night and enjoy the rest of the week. Thank you,
Yeah.
Clive.
Thank you, Chinky. Bye-bye.
Bye.
Thank you, Clive.